much for joining me. I know it is a very nice evening out, so the fact that you guys are on Zoom is pretty great. I've got my window open so I can see outside because we've had some crazy weather lately, so I don't mind it being warm and sunny. But tonight we are going to be covering record keeping's tie to taxes. So all that means is we're going to focus mainly on farm taxes. We'll start at a very basic level, kind of go through some tax saving benefits that we get as farmers, how you can tap into those benefits. We'll go through some regulations, and I'll follow that with some record keeping just because you really can't file your taxes correctly if you don't have the right records. So we're going to kind of cover both today. It'll maybe take us a little over an hour. And of course, as I go through this, because taxes can be kind of confusing, and I've tried to make the lingo as simple as possible, but you guys know how it is trying to read tax codes. You never quite know what they're trying to say. So if you have questions as we go through this, put them in the chat box. I'll have the chat box up, or just talk out loud, and that's fine as well. Because I like it when it's more of a conversation, and I know this topic can bring quite a few questions. So there may be certain things that if you ask me, I might not know the answer off the cuff. I'm very careful when answering tax questions because I never want to tell anyone anything wrong. So if that's the case, I'll reach out to our tax specialist and make sure to get the answer for you. So without further ado, I recognize a lot of names on here, so that's pretty awesome. It's neat to see people who were on the last webinar, or I've met at SBC or a workshop that we've done before. So glad to have you on here. Before we dive into the main topic, I am going to let one of our veteran program coordinators kind of give you guys a quick overview of what AgVOLs is and basically why we exist. So Sarah, I will pass it to you, and I'll make sure to change the slides.
Thank you, Erin, and thanks for doing this. I know it brings a lot of benefit if you haven't heard that direct feedback or not. So I'm the East Tennessee coordinator, as Erin has mentioned. Charlie Jordan is my brother, middle to West Tennessee. He lives right outside of Clarksville. And so essentially, we are your go-tos to ask questions or to find anything out about this program I'm about to explain to you. Reach out. We work directly with for Erin and that website that you're going to see throughout here. Any of those questions, any of those resources can get to both of us. So next slide on here. This is me essentially. I just retired in 2024. My husband just retired in 2025. We moved to his hometown back here to Maryville, Tennessee, and wanted to get into farming because why not? It's peaceful, it's good for the soul. And so we started to essentially look at ways that we can be outside and calm down a bit. And so after 23 years enlisted first, 23 years I retired. I was in Intel, I was in Army, I was in Inspector General, all the things that people usually criticize or kind of can't stand sometimes in the military. But yep, I was proud to do those jobs. And now we're doing Swords to Plows farms with my three daughters there. We're I'm learning as you're learning. As I got out of the military, I went through a Soldier to Ag skill bridge and wanted to learn more, do more. And so I looked for that opportunity here in Tennessee, and that's how I found New Farmers Academy. And then I found the Veteran Boot Camp for Agriculture that TSU and UT put on. And I found Erin and the team. And so essentially wanted to get on that game. Here's some other things that I do. And then you're going to see my contact information several times here. I really mean it. Reach out. That's my personal cell. And that link there, Farmer Management, Tennessee EDU, AgVOLs, Veteran, that is our website. And then our actual Facebook is AgVOLs Opportunities for Farmland. Reach out to that because that's where we post anything we find out about or highlight or boost any of these workshops and training I'm about to talk about. Next slide. And so I'm going to dive right in. Here's some resources. So AgVOLs is essentially just that. It's finding veterans and finding farmers and connecting them with one another or connecting them with resources. Some of those resources that you see there are internship program. Now, internship program goes right into Skill Bridge, which some of you may or may not have heard. But we also take that a step further. Internships could easily mean, for instance, I'm going to use my husband and I as an example. An internship could just be, hey, I'm new into ruminants, I'm getting into goats. I'm starting to find other farmers that could be mentors for me, and I can trade my time to get some training as a farmer and learn my community and learn my trade. And so, yes, we are looking at, and we do have individual skill bridge for those transitioning out, but we're also looking for those retirees or those that have been on certain contracts or touched the military in one way or another, or it influenced you. We got a program for you, and we're interested in connecting you with other agriculture, industry, education, any entities that we can that is already in farming to help you be successful in farming. And then the next resource is Host Farm. If you've been farming for quite some time, that doesn't mean we can't still connect you or anything like that, or help you with some of the things that Erin's about to talk about. But maybe you have been farming for a long time, have a legacy farm, generational farm, or you've been established for minimally 3 years. And then we're looking for host farms to be those farmers where new farmers, new veterans, new transitioning service members, retirees, new individuals getting into farming can come out and work with you on a flexible schedule to learn about farming. And you get help on your farm. This isn't a workforce, so to speak, but it is a community and it is a mentorship of you, the legacy farmer, with a brand new farmer. And so that kind of goes into our host farm. Next slide. Opportunity and mentorship. So then what we also do is a scholarship program. And so let's, for instance, if you were going to do one of the UT master's classes, we can reimburse you for those costs for a master class if you wanted to attend to get certified in the agricultural commodity or interest that you have. Or if you're going to attend a conference, I went to Ladies Raising Livestock up in Greensville recently, and you can get reimbursed for some of those costs up to $250. And so you go through our website, and here's some of the uh, things that you may or may not qualify, New Farmer Academy, and ways to submit that reimbursement. You have to first do the training and then get us a receipt for that training and submit it, and we'll reimburse you. And then finally, one of the things to talk about is workshop programs. It's kind of like what we're doing right now, this webinar and some of the business aspects that Erin helps us out with fundamentals and such for farming. If we have workshops that we put on within certain counties, both Charlie and I, Charlie may be doing some of the workshops himself, or if we know of a farmer and have those host farmers or established relationships, raising or putting together greenhouses, putting donkey runs together, raised garden beds. There's so many opportunities for us to learn that craft just by being in a community together and get that hands-on experience and then network from there. So that's essentially, next slide, that's essentially in a nutshell, the programs that we offer. And as a coordinator, I'm running around trying to find you. If you know somebody and you're interested in any of those things, reach out. And here's the information in order to contact us to learn more about those resources, become a mentor, become a host farm, or if you're an intern, let me help you connect with somebody in that area that you're interested in. That's it. Thanks, Erin.
Awesome. Thanks, Sarah. I'm sure a few of you have heard that spiel a few times. We always have new people hopping on, so I just want to make sure everyone knows what AgVOLs is and what we can offer, especially with those educational opportunities. Again, any of those master UT classes that you take, I think we've got a list of almost 30 courses you can take that we'll reimburse you for. We just really want to make sure that you guys utilize those. All right, so I feel like I always have to get ramped up when I'm talking about taxes. It is actually one of my favorite topics to talk about because if you know how to do them properly, it's amazing how much money you can save. And I've sat down with several farmers. We've corrected their record keeping and it's saved them thousands of dollars, even in just 1 year. So I just love talking about this because it's something that you can implement almost instantly. So before diving into this, I did want to ask, and y'all can just throw it in the chat box, but how many of you all currently file a Schedule F? that is the profit or loss from farming for your farm. So you can either throw a hand up if I can see you, or maybe put it in the chat box. So I got a few hand raises. Okay. Okay, awesome. Yep, so I see a few of you guys are familiar. If you're just getting into farming, you may have not filed one yet, and that's okay. I was just curious to see how familiar you guys were with it. Okay, awesome. And you'll see me, I kind of like these things to be a little bit more of a conversation. So there will be several times I ask you guys, like, throw it in the chat box, but answer some questions that just helps me guide the conversation. And yes, I'm actually so glad that Jason put that in the chat box. That is something I'm going to try to not harp on it too much. But I actually just met with a farmer, and CPAs and tax preparers are awesome. But you do need to find one that is familiar with farms, because there's so many minute details and nuances that apply to us as farmers. I've seen several situations where things have been filed in a way that wasn't as advantageous as it could have been. So I'm glad he pointed that out. You'll hear me kind of harp on that a few times. So rolling in real quick, I do have to say that I am not a tax preparer myself. So just take this as information, not any type of legal advice. And then of course, we always say, if you are filing farm taxes, look for a CPA or a tax preparer. Make sure that they are well versed in farm taxes. I'll let you guys know. I do most of my own taxes. However, we have started, as our farm has grown, we've started utilizing Farm Bureau's tax preparers. They have one in each of their office, which is really awesome. You do not have to be a Farm Bureau member. I am not. I get my insurance through Country Financial. All I have to do is pay Farm Bureau a $30 fee, and he does my taxes. I think his bill was like 80 bucks or something by the time I was done. So very, very cost effective. They know what they're doing. He depreciates all the stuff how we want it to be depreciated. So if you guys don't have someone you're using, please reach out to your Farm Bureau office, because very economical, very farm friendly, and they know what they're doing. So definitely look into that. All right, so we're going to start with the very basics of taxes, and you'll see how this plays into your farm taxes. So I always like to show where the income tax brackets are at, because they're changing every single year. Normally they're going up with inflation. So for 2025, your income tax rates, if you're married, 10% is up to about 24,000, 12%, 97,000, 22%, just over 200,000. And I always like to say, if you're in one of these other tax brackets, I don't know whether to say congratulations or I'm sorry that you're taxed so heavily, but there are higher tax brackets than that. It's very important for you all to know which tax bracket that your income ends on, because that ties directly to how your farm income is going to be taxed. And we will talk about that. Few other minor details. The child tax credit for this past year was $2,000. If you have, a different dependent, maybe an elderly mom or dad living with you, with $1,000. So that has stayed the same. Okay, so let's go ahead and dive into the Schedule F. So in basic terms, it is simply showing your profit or loss from farming. So it's used to report all of your farm income and all of your farm expenses. Your depreciation schedules, all of that will also be attached to this. So with this, there are two things that are going to be taxed, or two ways it's going to be taxed. And this is what kind of, I don't want to say throws people off, but if you're looking at your Schedule F, and let's say you're doing good and you make a profit, they are going to take whatever your income tax bracket is. Let's just say it's 12%. They're going to take that. On top of that, and this is the one that people sometimes don't realize, because you are considered self-employed, they are also going to take the 15.3% that goes into Social Security and Medicare. So it can feel like you're being hit twice with taxes when you see what they're taking from it. But if you're employed with someone, they're the ones paying for that Social Security and Medicare, or it's automatically coming out of your paycheck. Whereas if you're farming, that's not automatically coming out. So that's why they tax it on the back end. So do keep in mind, you have to think about that 15.3% plus whatever income tax bracket that you're in. So let's look, oh, hold on, I've got something in the chat box. Let's see. Oh, okay, yes. So I will put this back in the chat box. Someone was asking what farm insurance I utilize. I utilize Country Financial, and they have been fantastic. They come out once a year. They walk my farm with me. We talk about areas that need to be covered. Very economical as far as cost. They also do our life insurance and a bunch of other things. So definitely reach out to them if you're looking for another insurance company to work with. All right, so back to this. Here's the Schedule F. I love it because as far as tax forms go, it is actually pretty user-friendly. It's not too bad at all. So up here, you've just got your basic general information, your name, the name of your farm. Something that also sometimes gets people is they get over here and they see this EIN number and they think that you have to have an EIN number to operate a farm. So just know you absolutely do not. You don't need to open a business. You don't need to start a business license. You don't need any of that. So if you do not have an LLC with an EIN number, all you do is simply put your social security number. And what they're going to do is they're just going to deem you a sole proprietor and move on. So don't worry about that and don't let that confuse you. Also with this accounting method, again, if you're filling this out yourself, or it's just good to know, most of us are using the cash method. So I would say 99% of the farms I utilize, it's just cash, which means when your money actually leaves your account or when money comes in, that's what you're looking at. You're not looking at when things post to your account. So it's just almost like in real time. You're going to use that cash method. So this part one, this is all of your farm income. So you'll see here, sale of purchased livestock and other resale items. So if you have maybe purchased some calves, let's say at 300 pounds and you sold them at 700 pounds, those would go in here because you are purchasing them and then selling them. You're not raising them yourself. You also have this next line, sale of livestock, produce, anything like that that you sell. So if you're, selling vegetables, that would go in here, raising livestock, same thing. You then start getting into things like ag program payments, commodity credit reports, any type of crop insurance. Not a lot of us will have this every single year, but if we do have some kind of disaster and you have crop insurance, that income would be put on here. Also, if any of you all do custom hire work, for example, if you have a tractor and you take it and you hay someone else's property or you till up a garden bed for them and they pay you for that, that would go here in line item 7. And then down here, you'll see gross income. So you just put all of your income in there and then you get a total. And then down here, we have all of the expenses. And I think I've got it zoomed in. I do further down. So here we go. I do want to touch on a few of these items because they can be confusing. So you'll see here listed out, there are a bunch of different, I call them categories, and that'll go into our record keeping later. But you've got your car and truck expenses, you've got chemicals, custom hire work. If you hire, some dozer work on your property, which we just had done, that expense would fall into here. Depreciation, that's going to be section 179. That is actually another set of reports that will be attached to this. Most of the time you are going to need a tax preparer to get those numbers for you. We've got basic things like feed and fertilizers, gasoline, just a bunch of different categories of things you could be purchasing for your farm. So a few things, we will hang out on this slide for just a minute. So the first one up here I want to talk about, this line item 10, is car and truck expenses. So there are 2 ways that you can expense out. If you're using a vehicle for your farm, there are 2 different ways you can expense out those costs. One way is you can keep all of the receipts. Let's say you've got a truck you use for your farm. You can keep all of the receipts for gas. So every time you fill up gas for that truck, keep the receipts. You need to take it in, they need brakes changed, anything like that, you keep those receipts as well. So any maintenance and any gas that you utilize, you can keep those receipts and then expense them out here on line item 10. The other way you can do it is you can do a mileage log. So I've seen farmers just keep like a little notebook in the dash of their truck and they'll just mark, feed store or, hauled to the sale barn. And you keep up with those mileage that you put on that vehicle, and then you can expense out that standard mileage rate that the federal government has set. I think it's up to 70 cents now. So you would get 70 cents per mile. I would say typically, unless you've had something huge done on your vehicle, the mileage typically gets you a little bit more. I've had some people, they keep up with both. They figure out which one ends up looking like it's more expensive, and then they'll put that in there as well. So it's kind of up to you, but that's the way to do it. So where people get confused, you've got this line item 10. Down here, you have gasoline, fuel, and oil. And I've seen people put gas receipts for their truck on line item 19. Line item 19, that gasoline, fuel, and oil, that is only for equipment on your farm. So that's like for your mowers and your tractors and equipment. I don't know, I'm trying to think about chainsaws. We've had a lot of tree damage here, so that's all my husband's been doing. So those costs go into this line item 19. So just remember 10 and 19 are different. Something else I want to make sure you can do, because we actually just did it with one of our vehicles. We have a truck that we use for personal use and the farm. So our tax preparer asked, well, how much do you use it farm versus personal? And it was about 50%. So when we purchased that truck, we were able to write off 50% of the cost of that vehicle. So keep that in mind as well, because you can do that even if you also use it for personal use. You'll just give them like an estimate of how much you use it personal versus on the farm, and they can depreciate it out and do all that so you can capture those expenses. Okay, any questions on the vehicles before I move forward? Okay, well, if you think of one, just let me know. So something else.
Yes, I do.
Oh, yes.
Let's see. You have repairs and maintenance, number 25.
Yes.
How is that different from car and truck expenses?
So that repairs and maintenance, that is going to be on machinery on the farm, like tractors, mowers. It could also be if you got a hay barn that you had to put gutters on because of erosion. It's repairs and maintenance on the farm.
And I've got a question as well on the write-off part. Is that at one time or is that depreciation like in a regular business, a percentage per year?
Yes, so we will spend quite a bit of time talking about depreciation. It depends on how you want to do it. So with the big beautiful bill, there was a pretty significant change. You could 100% depreciate it out in 1 year if you wanted to, or you could spread it out. So we'll talk about that here in a few slides. So good question. Yep. Okay, so something else, and this might not apply to anyone on here, but I always like to talk about it. So this rent or lease over here, so not so much on the expense side, but I've met several farms who have a couple of old farmhouses on the property that they lease out. And they think that they can report that as farm income, but you cannot. So just keep that in mind. I believe it's called a Schedule E that you report that on, but if you've got old home, or I mean, new homes, old homes, it doesn't matter. But if you are leasing out something on your farm as far as a residence, just know that that's not considered farm income. Now, if you've got a hay barn and you're leasing land, that's totally different. But just know a residence is not considered farm income. We get that question a lot. So a couple of costs I want to make sure that you guys are aware of that you can put on here that's not listed. One of them is legal and professional fees. So for example, what I pay the Farm Bureau guy, I could put that on here. I could expense it out as legal and professional fees. If you guys utilize an ag attorney, you can put them on here. If you utilize Quicken or QuickBooks, and that's costing you so much a month for record keeping, you can also put that on here. So travel and meals is another one, and I actually was not aware of this one until my husband and I started traveling about twice a year to Iowa to get certain supplies for our farm. And of course, when you're on the road, you're having to eat out. And I'm like, man, this is a little bit expensive, but I didn't think, because it's considered like entertainment, I didn't think we could expense those out, but you actually can. So travel and any meals that you eat on that trip. So like your hotel costs, gas, all of that good stuff, it can be expensed out. Now with the hotel cost and the meals, it's only 50% of what it costs. So you can't do 100%, but you can do 50%, and that's better than nothing. So also keep that in mind. Startup cost, a lot of us have startup costs. You can expense out, I believe it's up to $5,000 of startup costs just in one fell swoop. So you can also expense that out as well. This last one, contract labor, you'll see, and I've got to find it. Okay, line item 22 is labor hired. This labor hired is different than contract labor. Labor hired is someone on your farm that has like a W-2. They're on your farm working all the time. This contract labor is someone you hire and maybe you give them a 1099, or maybe not even that. They're seasonal. They're not on your farm consistently. So there is a difference there as well. All right, any questions on these expenses before I move on? Okay. Oh, and one more note. Oh, go ahead.
So I have a guy because I travel quite a bit for my regular profession, and he comes and take care and watches my animals, takes care of stuff while I'm gone.
Yeah.
He's an older gentleman, not doing a 1099 or anything, but we just pay him per a daily rate for going out there.
Yeah.
Without, obviously we don't charge taxes or nothing like that, but is that even good to be used either way?
Yes, it is. I would put that under the other expenses, absolutely.
Awesome, thank you.
Yep, no problem. So the other thing I was going to say, and I'm glad I know myself well, I couldn't quite remember on this, but down here at the bottom, because I know we have a lot of beginning farmers on here, so you can deduct $5,000 a year for startup costs, and then the remaining startup costs can be amortized over a 180-month period, meaning that you can claim whatever else you have and spread it out as far as 180 months if you wanted to. So you will be able to expense all that out. You just can't do it all in 1 year. Okay, so quick question for the chat box. Just either put livestock, horticulture, or both. I kind of want to see what we're working with here. So if you do livestock, put that. If you do horticulture, like any kind of crops, vegetable gardens, you can put that. If you do both, just put both. But I kind of want to see. Okay, good deal. So a good mix. I'm about to go a little bit livestock heavy, so that's why I'm asking. Okay, so we got a lot of both. We got some livestock. I didn't want to hit this too heavy if it was all horticulture people. I feel like horticulture taxes are a little bit easier than livestock taxes, and you'll see why here in just a minute. Okay, we've got some small ruminants, so I'll make sure to touch on that as well. So I focus mainly on cattle most of the time, so I tend to get a little cattle heavy, so I'll try to make sure to get everyone included. So I'm going to walk us through a couple of scenarios that me and my team see all the time. It is probably the most common and easy mistake we see on taxes filed, and it costs the farmers quite a bit. We actually teach tax preparers across the state about ag taxes, and we're trying to help mitigate that problem. So we're just going to kind of walk through a scenario. I'm going to show you wrong reporting versus right reporting. So in this scenario, and ignore these prices, I can't keep up with cattle prices. They just keep going higher. So these prices are not accurate for right now. But let's say you've purchased 4 calves, 450 pounds for 1,200 a piece. So you're buying 4 calves. You then sold these 4 calves. You grew them out some up to 800 pounds for 2,000 a piece. So you've bought them, you've grown them out, and now you're selling them. Typically, you raise all of your animals, so you're not very familiar with reselling and probably how to file that. So let's say you're like, okay, so I sold these calves for $8,000. That's great. I'm just going to lump them in with the rest of the calves that I raised and sold. So I'm just going to put them here on line item 2, or I'm just going to tell my CPA, just again, you lump them in with all of the calves that you raised. So you just put them in here with the sale of livestock raised, $8,000. So if you do it this way, because maybe your record keeping isn't right, or maybe you're just not aware, this increases your income by $8,000. So remember, when you increase your income, and in this case, we're going to pretend that it's profit, because that's the only way you're taxed. You've increased your profit by $8,000. So that $8,000 is going to be taxed 15.3%, plus I just chose the tax bracket of 12%. So this would be the wrong way of reporting. So let's say you go back, maybe you've taken this course and you're like, okay, awesome, I'm going to go through and fix this. So in this scenario, you're going to put how much you sold those calves for up here on line item 1A, $8,000. You're then going to remove the basis or the cost of those animals. So you'll see right here, cost or basis of purchased livestock or other items. So even if it's horticulture, if you've purchased something wholesale and then you're reselling, you 1000% want to make sure to take that basis out. So you take the basis out of 4,800, all of a sudden it only increases your income by 3,200. So the difference here is you're being taxed on 3,200 instead of $8,000. And the difference in that would be, instead of paying over $2,000 in taxes, it lowers it down to 800. And that may seem like a simple example, like, well, of course you want to do that. You would be shocked as how often we see this mistake. And when you're running 50 head, 30 head, 100 head, that adds up very, very quickly, especially with these prices right now. You do not want to be paying any more taxes on those animals with how much they're selling for right now. So that kind of leads me into my next topic. Just say yes or no in the chat box. How many of you all are familiar with Form 4797 or have even heard of it before? Okay, those of you that have livestock, and those of you that don't have livestock, you'll still use this in a different way. But take a screenshot of this, take this to your tax preparer, make sure that they are utilizing this form. This is also the biggest error that we see when farm taxes are done. So your Form 4797 is the sale of business property. So it is where you report selling any long-term assets. So this could be tractors, equipment that you've kept for a while. But what people often don't realize is that their breeding livestock are considered a long-term asset if they're kept for a certain amount of time. Most of us with small ruminants or cattle, we are keeping them well past the time that they're considered a long-term asset. So with cattle and horses, it's 24 months. You have to own that animal for 24 months or more in order for them to be considered a long-term asset. Other livestock, including sheep and small ruminant, which is what we also have, is only 12 months because they're a smaller animal and they are not kept as long as cattle are considered. So if you've got small ruminants, you have does that you breed year over year, you have bucks, rams, whatever it is that you keep, you only have to own them for 12 months for them to be considered a long-term asset. So what this allows for, it allows for depreciation on those animals. You don't have to depreciate them, but you can. And what's great about what is reported on this form is that you are not taxed that self-employment tax on that income. So anything you report on here, it doesn't get hit with that 15.3%. And that's where we see that big difference. You are subject to capital gains tax rate, but that is minute compared to that self-employment tax. And we're going to walk through an example of this. So here's the 4797. Again, it's actually fairly user-friendly. Your CPA or tax preparer will know they can easily fill this out if they are aware of the form. And that's kind of what we run into. A lot of times they're just not aware of this because this is so farm specific. So let's go ahead and walk through a scenario so you can see how to utilize this. So let's say you sold a breeding cow for $1,300. You had purchased her 4 years ago at $1,440. So again, it's just like you've looked at your herd and you're going to cull some of your girls. We'll just pretend that you're culling. So bought her 4 years ago. Maybe she's not breeding back well, and you're like, okay, I'm going to cull her and go ahead and sell her. The expense of the sale was $100. So that's like hauling her. Maybe the auction had a fee, so it was $100. You had allowable depreciation of $993 on her. Again, that is something that number is something your tax preparer will come up with. So we don't expect you to figure out that number on your own. So would this go on Schedule F or Form 4797? Well, we've owned her for 4 years. She is a breeding animal, so she will not go on the Schedule F. She is going to go on that 4797. So let's see what that would look like. So again, we're going to go through the wrong way and right way. So let's say that your tax preparer isn't aware of that 4797 and they say, okay, I'm going to put the sale of her on your Schedule F. We see this all the time. It is so common. So they just put her on the sale of purchased livestock for $1,300. Again, this $1,300 is going to be subject to your tax bracket plus that self-employment tax. However, if you put her on the 4797, I'll kind of walk you through how you would do that or your tax preparer. So you would just maybe you could put her tag number or description, but you've got a breeding cow. You bought her May 1st of 2020. You sold her October 1st of 2024. Sold her for $1,300. There's that allowable depreciation. Then you have that cost or other basis. So you've got her original cost plus the expense of the sale. So all of a sudden your gain or loss, what you made from her, instead of $1,300, it is now down to $753. So again, instead of paying taxes on $1,300, including that self-employment tax, now you're only paying taxes on $753, and it's only that capital gains tax. This makes a huge difference in what taxes you're paying, especially if you're, whether it's a bull, whether it's, several mama cows that you're culling. Again, this is same for small ruminants. Putting them on here, again, it's like a double whammy. And not only lowers that profit that you're showing, but it also lowers how much taxes you're paying as well. Any questions on this before I move on? And again, this is just a form that you can say like, hey, to your tax preparer, are you aware of the 4797? I want to make sure to utilize that. So that just may be something y'all have to do. But any questions on it? All right, good deal. So in order to be able to file these things correctly, you need to make sure that you're record keeping right. So you need to make sure, separate, not physically, but I guess record keeping wise, separate your calves raised versus purchased. Make sure that you separate your breeding livestock raised from breeding livestock purchased. You'll have almost like 4 different categories because they're all scheduled or filed a little bit differently. So again, this determines whether they go on that Schedule F or 4797 and whether they're resale or raised on your farm. All right, so now that we kind of covered the 2 main forms, again, you've got your Schedule F and the 4797. We're going to talk about some general farm tax reducing tips, just some things that have come down the pipeline through the big, beautiful bill, and some that have been around for a very long time. So the first one is, I just got done talking about looking at your livestock as a long-term asset. So there are some exceptions to this rule. And for us in Tennessee, with our lovely crazy weather, we get to utilize it fairly often. So not so much this past year, even though it felt like a drought. The previous, I would say, 3 years, Tennessee went through a pretty rough drought, as did a lot of states out west, especially Texas. I've got an example right here of the drought map back in 2023. So let's say you're operating, you've got your livestock, a really, really bad drought comes through. You realize you're not going to have enough forage for, your girls and their calves. You're not going to have enough water supply. So you start culling and reducing the size of your herd. If you sell certain animals because of a weather-related event, if you haven't kept them for this 24 months or the 12 months, whatever livestock that you have, they're going to look past that. So let's say you've only kept some of these girls, let's say it's cattle, you've only kept them for a year, but because of a drought, you're having to cull more than usual. That is fine. You can still put them on the 4797 instead of the Schedule F. So again, that's saving you quite a bit of money. Something else is if you purchased a bull and maybe they weren't tested, or they were tested and things changed. If they are found sterile, you don't have to keep them for that 24 months. You can go ahead and sell them and put them on the 4797. Another big one, and this is very, very important because it's amazing how much money you'll save doing this. Let's say you're done with your livestock, you're ready to sell the entire herd or flock. Any of those younger animals that you have that you would have kept as replacements as breeding livestock, those can be recorded on the 4797 instead of the Schedule F. So instead of having to put that entire income from your herd on the Schedule F, you can actually shift quite a bit of it to that 4797 and avoid that 15.3%. So there are some exceptions to that long-term asset rule. And with the weather-related events, it does not have to be deemed like a crisis with the federal government or the state. So it's not like something has to be officially recorded on it. It just has to be something that occurred in your area that you maybe write a brief description of. So don't feel like it has to be some kind of emergency to be able to claim that. Any questions on the long-term capital gains exceptions? And just remember, this is for cattle and small ruminants. All right, so the next big topic is depreciation, because there has been quite a few changes with this. So remember, depreciation is allowing you to expense out the cost of a certain asset over a certain amount of time. So if you've got small equipment that you've purchased in the year that's under $2,500, you can expense that out in 1 year. It doesn't have to go on a depreciation schedule. You can just put it as an expense on that Schedule F. So remember, anything under $2,500, you can just go ahead and expense out. Don't worry about depreciating. There are multiple ways to depreciate an item, and we're going to walk through each of these. So what most people utilize, or all farmers utilize, is the GDS schedule. So there are all different categories for this. I'll show it to you here in a minute. But new equipment is typically, they have a 5-year life. So again, the expense of that, let's say tractor, will be expensed out over 5 years. So you're able to continually get that income lowered over the next 5 years because you're expensing that item out. Used equipment is 7 years, and I like using GDS because it's helpful to reduce future income. Now, a couple of other options that you have now is bonus depreciation. Now, some of you all may have utilized this over the last couple of years. It was actually supposed to phase out. It was in what's called the sunset phase this past year, but with the big beautiful bill, it has now changed to where you can 100% expense out or depreciate an item, starting after January 19th of 2025 in one single year. And this was made permanent. And I say made permanent, at least with who's in office now, it will stay permanent. It may change in the future if the cabinet is shifted. So again, you can 100% depreciate a tractor, a hay barn, any of that if you decide to do bonus depreciation in 1 year. Now, it does have to have a class life of 20 years or less. And I think a hay barn is right at that 20 years. So you can expense that out as well, but anything higher than that, you cannot. Most of us don't have anything past that 20-year life though. And again, I'll show you the chart here in a minute. Now, my, I guess, words of caution with this. Again, this is a fantastic tool. If you have, with cattle prices right now, maybe your income is higher than normal. Maybe it's bumped you up a tax bracket, and in order to bring you back down, you need to use the bonus depreciation. I am all for it. That is fine. However, I can see people get too eager with bonus depreciation, and it looks awesome that 1 year, but then the 4 other years that you could have expensed out that item, all of a sudden now you don't have that expense at all. And that can really mess up your income versus expenses level when it comes to taxes. So it's a great tool to utilize. Just make sure to think it through before making that decision. I have unfortunately also seen someone before, and it's I'm trying to think. He's actually a veteran. Yep, he was in the Army, and he brought me his taxes, a good friend of mine, and he said, hey, I don't have as many expenses as last year, and I'm a little confused as to why. So I'm looking through it, and I see that his tax preparer had bonus depreciated essentially everything, because he wanted it to look good. And Bryce had told him, make my taxes look as good as you can. So that's what the tax preparer did. But that made it to where he had almost no expenses other than little expenses in the next year. So he ended up having to pay quite a bit of taxes because his income was higher. So definitely make sure when you get that depreciation schedule, talk to your tax preparer, because they may just be trying to help you out. But if you don't want to bonus depreciate, make sure you talk to them about that. Another option is the Section 179 deduction. And again, this was changed through the big beautiful bill. You can do this instead of bonus depreciation. It is on a per item basis, so you can choose one item or individual items in order to completely depreciate in 1 year. You can do up to 2.5 million in 1 year. So I don't know if any of us on here are doing that. I know we're not, but you can deduct up to 2.5 million in 1 year if you so choose. With this one, the big difference is it has to be in a 10-year class life or less. So it's not going to be up to that 20 years. So another word of caution with the bonus, again, we're shifting back to the bonus depreciation. One of the other rules that it has is if you utilize it, let's say you decide to, you've built a high tunnel and you're going to bonus depreciate it out in 1 year. You've decided to do that. You've spent maybe 20 grand on a nice 30 by 90 high tunnel, and you're going to depreciate it out in 1 year. So you'll see here that is in a GDS class life of 10 years. With bonus depreciation, if you have other items on a depreciation schedule that is in that 10-year class life, you have to bonus depreciate all of them. So you can't, whereas with 179, you can individually choose items. With bonus, you cannot. So if you've got a high tunnel plus, let's say, a hay barn on a schedule, you will have to bonus depreciate out both of them. So anything in that class life, you have to bonus depreciate it all. So also be careful with that because sometimes that can add up a lot more than you're thinking. Okay, any question on depreciation, bonus depreciation before I move on? Okay, good deal. All right, so another change, trade in of equipment. So this was another good change. It used to be considered,
I'm sorry, I had a question.
yeah.
Couldn't figure out where the mute button was. Um, so I'm about to purchase a 10-acre farm right next to mine
Hmm.
that has buildings on it and everything else and a house, but I plan on getting rid of the house
Okay.
because I just want it for the land. I don't know if that's a whole new detail, like, because I was gonna put it into like have it rezoned into one under one address, everything else like that. Like, how would something like that work?
So it sounds like you're going to, oh, and the word is leaving my mind. Are you going to cut out that house from the rest of your acreage and sell it? Is that
No, well, I would burn it down if I could, but basically I'm just gonna I'm just gonna it's a double wide. So I'm
okay?
just gonna sell the double wide off of it and keep
Oh, oh,
everything else and keep the buildings, and I want the land so I can get more animals and have
yeah.
another field put off.
Gotcha, gotcha. So you're actually saying you're not selling any land. You're literally just going to sell the double wide and have them move it. Is that
That's correct.
okay? Okay, awesome. Well, good. I'm glad you're not having to carve any land out because there are quite a few regulations. Not, I mean, not really, but in certain areas you have to have a certain amount of acreage tied with that home, but you won't have to worry about that. So tax wise, with that, if you're selling the trailer off of it, that won't be considered farm income. I'm actually not quite sure where that would fall as far as reporting that. Was that your question?
Yeah, basically, plus like does that, I mean, it really doesn't go into startup cost because I've already kind of started up, but I'm starting another 10 acres. I don't quite understand. I mean, the fences are all need to be fixed. I mean, it's basically a mess, but
Yeah.
I
Yeah.
guess
So
that was my thing, and just to like add that land to what I currently have, and then just basically, I'm not too much worried about the taxes on dumping that house off of it because I'll give it away for free if someone will just disconnect it properly.
right.
Um, but I guess like adding the land to mine, is that like an expense? That I guess I don't know where that would fall.
Yes. So that is something as far as purchasing the land and then of course all the buildings on it. Are the buildings older?
I would probably say yes.
Okay, so it kind of depends on the age of the buildings. Um, I'm going to make myself a little note because I can ask my tax preparer guy if that's something, could you get the value of those buildings and depreciate them out? It just kind of depends on the age of them.
Okay, I appreciate that.
So that's something, yeah, I'm taking and I've got your email since you signed up. So that'll be, so yeah, how the land could be expensed and depreciated. How much land is it?
I think it's like only like 8 point, just
Okay.
shy of 9 acres.
Okay, awesome. Landed in some older structures. Yeah, I'll reach out to my tax guy and see if I can get you a good answer on that. Any other questions on depreciation? Okay, good. All right, so going back to this, let's say that you have bought, you're selling an old tractor, you're buying a new one. And I will say I lean towards Kubota. I know there's going to be mixed feelings on that. People are very passionate about the color of their tractor. The dairy farm I worked on all had Kubota, so I created a very close relationship with this brand a long time ago. But we do have all Kubota on our farm. But anyway, so let's say you bought a new tractor, you're selling the old. What's great with this, it used to be considered a like kind exchange. It is not anymore. So what I mean by that is your old tractor, again, it's a long-term asset, would go on your 4797. What that means is that you are only paying that capital gains tax on it. Great. getting to avoid that 15.3%. What makes this even doubly nice is the new tractor can then go on your Schedule F as an expense. You have the choice to either bonus depreciate it out in 1 year, so you can expense out that entire tractor in 1 year, or of course you can do the depreciation schedule. So it didn't used to be where you could put the old on the 4797 and expense out the new. This change has really helped us as farmers when it comes to purchasing equipment. And as we all know, equipment is not cheap. So being able to do this is a huge help. Something else that you can do, let's say you've got a high income year, and again, it's shifted you into a new tax bracket. You're really trying to avoid that. Something else you can do is prepay expenses. So if you have feed, fertilizer, seed, you need to fill up your fuel tank on your farm, any of those things, even though, let's say it's 2026, even though you may not use those items until 2027, you can go ahead and purchase them in 2026. Now, there is a rule on this as far as, if you're ordering from the co-op, it has to be a purchase, not just a deposit. You can't just reserve these items. You have to officially purchase them. And you're only allowed to deduct up to 50% of the current year's farm expenses value. That was a mouthful and it probably didn't make sense. So let's say you've spent $100,000 in expenses on your farm in 2026. If you wanted to, you could spend up to 50% of that value on next year, but you could claim it this year. So you've spent 100 grand this year. You're going to go ahead and prepay expenses the max amount that you can, so you can spend an additional 50,000. So instead of reporting 100 grand in expenses, you can report 150. And again, this is a income tax reducing method that you can utilize. So again, if you've had a high year and you need to spend some money to get things down, this is a way to do that. Do keep in mind though, it's only on a year basis. You can't buy supplies for 2028 and 2026. It'll have to be for that following year.
Is that total expenses or is that just on those particular, related to those particular items?
On total expenses.
Okay.
Yep.
Thank you.
Yep. Okay, so something else that people have really started to utilize, and I think it's pretty neat, you can pay your kids under the age of 18. This is also a farm income tax reducing method. What you're basically doing in this way, let's say, your kids are working on your farm. What it does is it transfers that income into a lower tax bracket. Your kids aren't going to be in the same tax bracket as you. And what's nice is as long as they are minors and they make under the standard deduction. So let's say for this past year, it was $15,750. So as long as you do not pay them over this $15,750, they don't have to file taxes at all, but you can expense it out. So for you as the parent, your benefit is getting to expense it out on your Schedule F as contract labor. And your kids' benefit is maybe you're just putting it in a savings account for them and they're not having to pay any taxes on it at all. Now, if you do pay them over that $15,750, they do have to file, but they are not subject to that self-employment tax. So they'll only have to pay the income tax rate that they fall into, which is probably that like 10%. So that's another benefit. If you pay them more than that, you don't have to worry about self-employment tax. So you do, I don't want to say have to be careful, but you do have to be fair in this. So the duties that you've given your kids have to match the age. So if you're showing that your 3-year-old is making $30,000, the IRS is probably going to look a little sideways at you. But if you've got, I'm trying to think how young I was. I think I was maybe 10 the first time I started working at a farm. If you've got a 10-year-old that's out there pulling plastic for strawberries, which is what I was doing, you can pay them for that. Just keep in mind that it needs to be reflective of their age, just so that you don't want the IRS looking at you. But any questions on this? This is a pretty handy tool, and I see a lot of farm families utilize it. All right. Okay, so I don't know if anyone in here is involved with timber, but you know, a lot of us who purchase land, we either have timber on the property or maybe one day we want to have it timbered. So make sure I'd say another top thing that we see as far as mistakes made on taxes is, you know, people forget to establish what's called a basis for that timber. So let's say you buy a piece of land, you don't get a basis established because you don't know you need to. So you bought a piece of land 20 years later, 10 years later, you decide to have it timbered, and you've got that income. Typically when you get that income, it's a pretty good check when it comes to timber and wood and all that good stuff. So the mistake with that, let's say you've made $200,000 off of having your land timbered, and you're not going to do it again for another, 20, 25 years. But again, 200 grand is pretty awesome. The thing with that is you can actually, even if you did not have a basis established when you purchased the land, before you have it timbered, have a forester come out, say, hey, I bought this land 20 years ago. What would the value of this timber have been 20 years ago? Let's say it would have been worth $50,000. So instead of paying taxes on $200,000, now you're paying taxes on $150,000 because you had a basis established. So a lot of people think, well, I didn't get a basis done when I first bought it. That is fine. Foresters can come out and give you an estimate of what it would have been worth 5, 10, 15 years ago. So if you've got timber, please get a basis established. You'll save yourself a huge chunk of money. Any questions on that? Okay.
Was a typical cost on a forester coming out, or is that just a service?
That is a good question. We had one come out, gosh, when we bought this property, and I say it maybe was $300. Which I guess how you look at it, that can be expensive or not. But again, it's not expensive when you look at the grand scheme of things. So
Right.
it really wasn't bad.
Thank you.
All right. Okay. And also, I apologize if you hear a baby crying in the background. That would be my 7-month-old. And it's getting close to her nighttime. So I apologize if y'all hear any of that in the background. Okay, so another great tool, and I do see some questions in the chat box, and I will hit those here in just a second. So something else you can do, it's called income averaging. This is pretty awesome. I've had several farms do this. So let's say you have a super high income year, but you've had some low years before that. So let's say the super high year has pushed you again into a new tax bracket, no fun. You can actually spread that income back onto your last 3 years of taxes. A Schedule J is used to do that. So again, I'll share these slides if you have a tax preparer and you need to, ask them about these things. A Schedule J is used. It's fairly easy, but it reduces your income tax over the current year. So let me show you an example of this. Don't worry about all these numbers. I know it's a lot going on. I just want to show you a couple on here. So this farm got started out. They made, I wish this was our farm, it is not. They made $323,000. It put them into the 20% tax rate. So they're getting taxed by $65,000. So they're gonna have to write a check for 65 grand. That is unfortunate. However, I do like that income. I would not be upset if our farm made that. So they decide, if we push back part of this income over the last 3 years, it's going to put us back down for all of those years into the 12% tax rate. So they do that. They shift a bunch of income back all the way back to 2019. It gets them down to 12% on all of those years. So all of a sudden they go from paying $65,000 in taxes to $37,000 in taxes. So it saves them roughly 30 grand. And again, this is really only something you're utilizing if you've had a high income year that's throwing your taxes off. A lot of farms do this. It's not difficult to do, so don't be worried about that. But you can take that high income and move backwards and spread it out over 3 years, which is really, really awesome. And again, in this case, it saved this farmer $28,000. That's a good savings. I would not complain about that. Okay, something else you want to make sure that your tax preparer is aware of is QBID. It's Qualified Business Income Deduction. Fantastic program. It changed with the big beautiful bill. It was supposed to expire after 2025, but it has now been made permanent. And again, I say temporarily permanent because I'm sure it'll change in the next election as things are transferred out. So with this, you do have to have a profit. So you'll only be able to utilize this if your farm has made a profit. But what it does, you don't have to do anything fancy for this. It's going to reduce your profit by 20%. So what that means is that you will pay taxes on 80% of your profit and not 100% of your profit. So it's almost just like a 20% discount on the amount that you're paying taxes on. And again, you don't have to do anything fancy for this. It's just almost kind of automatic. So just realize if you don't have a profit, you obviously can't utilize this. But, make sure your tax preparer, which most of them are, because this can actually be used outside of farming. But again, just make sure they know about it, because again, it's like 20% off right off the top, which is pretty great. You don't have to do anything for it. All right, any questions on the QBID or anything else before we move forward? Okay, so I've got a chat box question for you guys. How many of you all have your property in Greenbelt? You can just put yes if you've got your property under Greenbelt. Okay, good deal. I see someone applying for it this year. A lot of yeses, a couple of no's. So most people are aware of this, but I still always like to bring it up just in case that you're not. So Greenbelt is basically where if you've got over 15 acres of land, and you use it for ag, forest, any of those things, you can qualify for what's called Greenbelt. Another restriction or requirement that they have is that you have $1,500 of ag income per year. So sometimes people get this confused with profit. They think they have to have $1,500 of profit to qualify for this. No, it's just income. You can sell half a cow and make that $1,500. For a while before we were actively farming out here, we had someone leasing our property for hay, and we just put that and we were able to qualify. So what this does is it lowers the tax value on your land. So if you've got buildings, it won't lower the tax value on that, like your home and things like that. But on the land, it does. It makes them look at it as agricultural land, not any other type of land, which lowers how much in taxes you have to pay. So just to kind of give an example, and of course I only have our farm as an example, but we've got 65 acres in Sumner County, and my friend who lives in Gallatin, I think she's got like a probably 1/16 of an acre lot, a small home. She pays yearly about $2,800 in taxes, and I think we paid $1,200 this past year in land taxes. So it's a pretty big difference if you have it in Greenbelt versus not. So do make sure if you meet these requirements, reach out to your county tax assessor. That's who you do it through. And go ahead and get that worked out because it'll save you quite a bit of money. Any questions on the Greenbelt?
Those are all ands, not and ors.
So yes, they're all ands. Yep.
Okay. Thank you.
Yep. And that's why a lot of times when I'm talking to a beginning farmer who hasn't purchased land yet, I'll try to convince them if they're looking at like an 11-acre property, I'm like, can you find one that's 15? just because it's going to save you a lot in taxes in the future. Okay, so something else, and again, same thing. How many of you guys have ag sales tax exemption? Like through Tennessee? And that's just where when you purchase supplies for your farm, you get sales tax exemption, which is nice. Takes a little bit off. So in order to get this, very similar to Greenbelt, minus the acreage restriction, you don't have that. You have to sell a minimum of $1,500 of products per year. And again, this could be anything. It could be one goat. It could be some hay. It does not have to be profit. You have to obviously own some kind of land. You do have to have a Schedule F or some kind of farm rental activity. But for the most part, they just want to see that you're selling about $1,500 at least a year. So it's not hard to get at all. It's a very simple form. I will say, oh, and I've got the link down here for the form, and I'll share these files. But for those, so I live in Bethpage, which is right on that Kentucky-Tennessee line. It used to be where you could use your Tennessee tax exemption in Kentucky because we do a lot of business up there. They've gotten a little bit more strict on that. Kentucky is going through some changes. So we have had to apply for the Kentucky one as well. Super easy to get, just like Tennessee. So we now have both. So just keep that in mind. If you do business in Kentucky, just go ahead and apply for it. It doesn't take long at all. But we were starting to run into issues with them not being able to accept the Tennessee one. So any questions on this ag sales tax exemption? And if any of you guys need help with any of these forms, feel free to reach out to me and we can knock it out pretty quickly. All right, so as far as, I always like to talk about what auditors are looking for, because I have had a few farms audited and it's not as scary as you would think. But if you're worried about it being audited, or if you're wondering, am I actually considered a farm business? These are the things specifically that the IRS are going to be looking for. So they want to know that you're profit motivated. So they want to make sure that your farming operation is trying to make a profit. They're going to want to see possibly a business plan for your farm. And if you were on the recording about a month ago, we talked about business plans. And we did make a recording of that, and I'll make sure to share it with you all as well. They're also going to want to see separate records. So they don't want your farm account mixed up with your personal account. They want to see that you've taken continued education classes or trainings. A webinar like this would qualify. So I would just jot this down in your little notes book as a class that you took, because they will look at that as you taking education to try to improve your profit. They also will look a little bit sideways at you if you have super high off-farm income. So if you've got super high off-farm income, but you're claiming a loss year over year, eventually they will probably flag you. So with the IRS, and I actually think we talk about it in more detail here in a few slides, but they want to see that you're making a profit every 3 out of 5 years. They don't have to be consecutive, but if you start having a loss, 4 years, 5 years, 6 years in a row, they will start to be concerned. And again, they may not audit you, but that's kind of their rule of thumb. So just keep these things in mind and make sure to write down this class because they will take that as you trying to improve your farm. Okay, so that is actually the tax portion of this class. We'll finish up with record keeping, and this part should only take maybe 20 minutes. It's not near as long as the tax part. I try to walk through the taxes fairly slowly. So before I shift to the record keeping, any tax questions I can answer at this moment, and we'll have time at the end as well. I just want to make sure.
What's considered the high off-farm income? Is there a threshold there?
There is not a threshold, but I would say probably 200 grand and above.
Okay.
Yeah. And again, they don't mind the high off farm income. I mean, if anything, they're getting some good taxes out of it, but I don't know if I should have said that in a recording. Oh well. But it's more of if you end up showing a loss year over year plus that high, income, because then it's like, are you trying to make it to where you don't have to pay those taxes? That's more what they're looking at.
And that would be as the household or farm dweller residences as a total, correct?
Correct. Yes.
Thank you.
Yep.
I have a question because I'm pretty sure I fall in that high income one just because of mine and my wife's careers, but
Yeah.
we only work 6 months out of the year, if that, um, just based on our normal professions. And we just started a F. Last year was our first
Okay.
year.
Yeah.
So obviously we had like a massive loss, all the fencing. I mean,
Yes.
we had to do all the fencing, all like so much stuff. How long do they expect to give you before they may look at, hey, you're losing? Well, I mean, I started off with like with like 4 sheep, and now I'm up to like 40. So,
Yeah.
you know,
Yeah. So they, especially with beginning farms, because for example, with our farm, so we're an orchard, and so we are not seeing income other than small income with some other things we do on the property for quite some time. So, they are not naive to that. So let's say you're a beginning farm, you've got these huge expenses in the beginning. They're going to give you a few years with that and not worry about it because they understand. I mean, you should see some of the bills new row croppers send in. It's wild. So don't worry about that. And the thing is, even if they reach out with some questions, all you have to do is have a short explanation of, hey, we're an orchard. These trees are not going to produce until year 5, so this is where we're at, and that's totally acceptable to them. So I wouldn't stress about that too much if you're a beginning farmer.
okay, thank you.
Okay. All right. So let's kind of transition to the record keeping piece of this. Again, I know it's already 6:50, so I actually ended up talking way more. Taxes always take longer than I think, but we'll kind of fly through this and I'll share the slides. So I don't want to keep everybody too late. But so what is record keeping? I have never been able to find a good example of a definition. So just through working with a bunch of farms, I just kind of came up with my own. But it's the act of logging important characteristics of your farm that are measurable, that you can measure against, and help you make good management decisions to improve the financial or production health of your farm. That seems super vague. It is, but it's also very specific. So a cattle producer is not going to keep the same records as, let's say, a market garden style farm. You really can't compare them at all. So really for you all, it's important for you to look at what are the important characteristics on my farm that I need to make sure to keep up with to help not only the production side of my farm, but the financial side as well. So 2 types of records that you're going to keep. You've got your financial records. Of course, that is anything related to financial transactions on the farm. So expenses, incomes, loan rates, taxes, budgets, insurance, any of those things. So those are your financial records. What are the benefits of keeping financial records other than hopefully, saving some money on your taxes? The main thing is it's going to help you monitor your expenses and your income. So a lot of times when I show up at a farm, one of the first things I'll do is look at their expenses and their incomes. And I kind of look for like the red flags. I look for the red flags and the green flags. So what expenses seem out of line or way too high? And what incomes or what markets are looking really good that we can expand on. So again, it helps you realize where you're spending your money and are there ways that you can cut costs. One of the biggest things it's going to also help you do, and I would say this is 95% of what I do, it helps you determine your break-even price. So one of the biggest things I do when I come out to a farm is I help them figure out, they've got a calf walking through that field, they're about to take it to market. We figure out how much money they have in that calf. Or I, show up to, there's a mushroom producer I've been working with, it's been kind of new, but we figured out the break even on all 14 varieties of mushrooms that he had. He's a big producer in Nashville, and that was interesting. That took a few days. But the idea is when you sell that tomato or that bouquet of flowers, or you sell that animal, you know exactly how much money you have into that animal. That's a huge part of keeping financial records. It helps you create a representative budget for your operation so that hopefully we can do some forecasting. If you expand, what does that look like? Or if you cut down, what would that look like? So overall, financial records are very, very important for a lot of different things. I don't like to ignore production records, even though my job is specifically finances. You can have great finances, but if you don't know how to produce something well, or if you aren't well versed in what you're growing or raising, your finances are probably going to look bad after some time. So making sure that you're keeping good production records as far as the different varieties of plants that you're using. Are they hardy for this area? Looking at your different breeds. Are you looking at the right breeds that sell higher in this market? Something else like I work with a lot of direct beef producers. How is your average daily gain? What's your breed back time? Do you need to cull some more of your animals? So all of these things that play into the efficiency of your production. Because the problem is if you get kind of slack in your production and maybe you're keeping some mama cows that aren't breeding back well, that's slowly going to reduce your financial health over time. So I'm a huge proponent of keeping up with production records, whether it's horticulture or livestock, knowing what you're growing. I had a quick example, a beginning farmer called me, and I wish they had called me like 6 months earlier. They were starting an apple orchard. They weren't well versed in good varieties for Tennessee, and they sent me their list of varieties, and it was like Honeycrisp and Gala, all things that are just going to be a nightmare. They're going to spend a fortune on herbicides and pesticides with those specific varieties, but they didn't know. But now that they do know, the next set of apple trees that they're going to plant are going to be different. So paying close attention to variety selection and breed selection is super important. So anyways, production records as well. Oh, and I kind of already went through the benefits of it. But again, production records and financial records, they work together. So I say most of the time, if I'm coming to your farm and we're going to set up financial records, we're also going to go ahead and set up production records because they are just as important and they help each other out. All right, so where do you start with record keeping? Record keeping, I completely understand, is not very exciting. It can be daunting, especially in the initial setup phase, but it's so much better whether you've been farming for 5 years, 10 years, or just getting started. Go ahead and create a system that works for you. So we're going to walk through how I would suggest getting started with your records. And again, it doesn't matter if you've been farming for a long time or not. So the first thing I would have you ask yourself is, are you a farm business or a farm hobby? This question has really popped up on our team. We focus on farm businesses, but we've had a lot of hobby farms move into the area, or homestead farms. So the big question to know whether you're a farm business or a hobby farm is your goal to make profit? If the answer is yes, then you're a farm business. If the answer is no, if you're just providing for your family and maybe selling a little extra to cover expenses, then you are considered a hobby farm. And think back to us talking about our taxes. If you're a hobby farm, you're not making enough to show a profit. So after several years of filing a Schedule F at a loss, eventually the IRS is going to kind of kick you out of being able to file those expenses because you're not a business, as far as you're not trying to make a profit. So that is a question we get quite a bit, and it's honestly just something that's popped up since about 2020, when we had a big influx of homesteaders and hobby farms in the area. second thing I'm going to tell you to do is to please separate your farm checking account from your personal checking account. It is no fun to go through your bank records trying to file farm taxes when you're having to sort through hundreds of transactions a month because you have your personal in there as well. So it doesn't have to be a business checking account. We do everything, and I'm sure a lot of y'all do too. We do everything through Navy Federal. So we just have our farm checking account different from our personal. Makes it so much easier to keep track of your incomes and expenses. It kind of does it for you because you'll get summaries at the end of the year. And again, I say do it for your sanity because I've had to sort through people's bank statements that kept it all together. And for my sake, please separate it because that can be a little bit painful.
If we've already been kind of running it, how would you recommend doing that? Like, I'm not sure I could dump like a mass amount of money completely over to a new account and drain one for the other.
I got you. So do you have them both together right now?
Yeah.
Okay.
Yes.
Yes. So what my husband and I did when we started our farm is we took a small chunk of money and put it into that checking account. And then as it has needed to be increased, we just transfer from our personal to our farm. So don't feel like you've got to stick like 50 grand in this separate account and only take from it. We transfer from our personal all the time, and it's just considered an investment. So they won't look weird at that. They just don't want all the transactions together.
Thank you.
Yeah. All right, so the next thing you're going to ask yourself is, what records do I need? I don't have a list of records that you need because every farm is going to be very different. So again, that's just you looking at what you're operating and seeing what you need to keep track of. The next thing will be choosing a record keeping system. I'm going to share my favorite with you. And I will say I'm a little bit biased because there is one that I use for our farm operation, and I'm very thankful for it. So we'll walk through these. I don't have a ton of options. I like to keep things simple. So the first one is Quicken, and that is the one that we use for our farm operation. I've been using it for about 2 years now, and I absolutely love it. I love it because it's simple. It doesn't have all these gadgets and widgets that are overcomplicated that we don't need as a farm. So I kind of like to describe it as an online checkbook register. So what's nice with it, we have it tied to our Navy Federal farm account. So all of our transactions just automatically auto-populate into Quicken. And then all I have to do is click the categories box and say, you know, this was for feed or this was for fertilizer. It's all already in there. So I go through, hit whatever category that transaction is a part of, and it's super easy. It also allows you to split receipts. So if you've got a receipt that has feed and fertilizer on it, that's fine. You can split it on there and show the different categories on that one receipt. You can upload receipts to that. So I don't actually keep any paper receipts. I have my husband, as soon as he purchases something, take a picture of the receipt and just send it to me. And then I can upload it into Quicken and it'll stay in there forever. Something else you can do with it. A lot of us aren't just operating one type of farm. Let's say you're a cattle producer, but you also, let's just say you grow cut flowers. It has a feature called tags. We use it on our farm, and it's where you can separate your enterprises. So you can say, you know, this feed was for my cattle operation. This fertilizer was for my cut flower operation. That then allows you to look at the different enterprises on your farm separately. So you can make sure that they are both actually being profitable, or maybe they're both, you know, losing money, but you definitely want to be able to separate those out. One of my favorite things with Quicken is that it is very cheap, as in very financially easy when it comes to paying each month. So we have the, I think it's called the personal and business version. So we also have our personal finances in there. And I think we spend $39 a year on it. So very, very cheap, but very, very useful. So let me show you kind of an example of what it would look like. This was just a random example I found online, but I didn't want to screenshot any of the farms that I work with. So this is at the end of the year. Quicken has a Schedule F report that you can run. You just literally click the Schedule F button and it spits out this lovely report that you can then take to your tax preparer. It's what I utilize. But you can see here, based on how you categorize things, it goes ahead and it separates it into sale of livestock raised, ag program payments, chemicals, custom hire work. It all automatically separates those categories for you. So that's just an example of a report. So I will say I'm a very big fan of Quicken. Most of the time, if I'm starting with a farm, I will push them towards Quicken unless they have specific other things that they need to have QuickBooks for. QuickBooks is also amazing. I absolutely love it. It is a little bit more of a complicated or true accounting program, so it's not simple like Quicken is. QuickBooks is easy to use. It just takes a little bit more effort because it has a lot more features. I will start pushing a farm into QuickBooks if they have regular employees, like a payroll where they're, they have 401k, maybe they're doing 1099s. I will then push them into QuickBooks because Quicken cannot do those things. Whereas QuickBooks can. It can do payroll and all the fancy stuff. So I'm not going to go super detailed into QuickBooks, but just know it's kind of a more capable version of Quicken. But for most of us farming, Quicken works just fine. And I will say QuickBooks is quite a bit more expensive. They have a ton of different packages, but they are way more expensive than Quicken would be. And again, great program, but most of us don't need something as complicated as this. I see people use Excel all the time. I will say if you like to keep things a little bit more simple, you don't want to use an accounting method. I've set up a lot of Excel files for farms before that just aren't comfortable using those methods. How I set it up, and I can do it for you if this is something you would like, it's where you can just copy and paste your transactions like from your bank statement into this file. I then have a line item box that drops down and you can categorize things like chemicals, car and truck expenses. It matches that Schedule F. And we can also add categories that are important to you. So I make this little drop down box for you. And then this farm enterprise one is if you've got multiple enterprises on your farm. You can choose sheep or cattle, whatever one it needs to fall into. A lot of people use this, super easy. It's what I used for a long time until I switched to Quicken. So don't hesitate. If you want a copy of this, just let me know and I can send it to you. I also don't like to knock pen and paper because I've seen the most beautiful records kept in the lovely notebooks before. So my advice with any type of record keeping system that you keep, choose the one that you're actually going to use. I would much rather show up to your farm and you have, notepads filled out of all of your records versus some fancy accounting software that you're not comfortable using, so you just don't use it. So yes, our main thing, and I think I've got a picture in here. I just want to get away from this. So I can't tell you how many farmers I go to their house to help them with their record keeping. And I kid you not, we walk out to their truck and they open their center console and we have a box and we put all the receipts in the box. The problem with this method is a lot of times you don't remember what you bought at certain stores. I mean, I can barely remember what I did, yesterday. And the other piece of this is, I'm sure you guys have seen this, but some receipt ink actually disappears over time. So I've also been handed a lot of blank receipts. So my advice to help, mitigate the pain of having to record keep is to create a schedule. And I am kind of preaching to myself on this one because after doing everyone else's records, it's very hard for me to come home and want to do my own. But I do typically every Friday, I will spend between 30 minutes to an hour going through our Quicken, categorizing things, making notes of things, updating our production records. It actually does not take as long as you would think. A lot of times it takes me 30 minutes. It's amazing what you can get done in a short amount of time. So just make sure, get yourself on a little schedule. It will save you a lot of pain and agony down the road. I've been there before where it's been 6 months and I look back at a receipt and I couldn't tell you, well, I know this was feed, but I can't remember how much or what animal it was for. And it just can get things complicated very quickly. All right, so we are wrapping up. Here are some resources. If you've got more tax questions or you're curious yourself, it's the IRS publication 225. I've got the link here. I refer to it all the time. It's actually pretty easy to read, as easy as tax publications can be. I've got the link to the Schedule F as well as the 4797, and just keep in mind that tax season does end on April 15th. So make sure you get them done. I did also, we've got a lot of partners in the AgVOLs program. The partnership or the role that I play is the financial economist on the team. So I do work for the UT Center of Farm Management. I'm part of what's called the managed team. There's about 8 of us across the state. We all cover a certain region. I cover the north central part of the state, but every single one of you has one of me in your area. The link here will show you who is in your space. Of course, you can reach out to me because we're a part of this program, but do make sure to utilize our services. We help with record keeping, budgeting, taxes, developing farm plans. We do all that, and as long as you keep paying your taxes, we have jobs. So we don't bill by the hour or anything like that. We are completely free, and I don't like to say free because your taxpayer dollars do pay for us, but nothing out of pocket. So do make sure to reach out to us because sometimes we can help you save some money on the tax preparation side or CPA side. So I am going to open it up to questions. I do want to ask, and I know this is painful, it's part of our grant in order to keep us going. If you could fill out this financial workshop feedback for us, that would be great. It is part of the reporting that we have to do to show that we are actually doing something. So if you don't mind doing that, I also have the QR code or link to our website where you can check out all the different things that we do. But with that, thank you so much for spending so long on this Zoom with me. I know it went pretty long, but I hope you took something home with you and you learned something. I'm going to be hanging out for a while if anyone has questions, but if not, thank you so much for joining. We will have, I believe, mid-April, we're going to have a webinar where Farm Service Agency is going to get on and talk about all of their different loan programs, farm programs. We're going to have the state specialist on. So hopefully we'll be able to get you guys some more good information. But thank you guys so much, and I'll hang out for questions.